In this episode, we're honored to have Justin Corpus, the CEO and founder of Truevir Financial. Justin is dedicated to enhancing financial literacy and empowering individuals to build, protect, and preserve their wealth. Part of his work is also helping those with bad cash value life insurance plans, such as indexed universal life and whole life. We'll explore his insights on asset protection, tax-free solutions, and strategies for achieving financial freedom. Let's get into it. Hi, everyone. We're back with another episode here with my man, Justin. But first and foremost, if you guys aren't subscribed, please subscribe below. About 95% of people that watch my podcast and learn about all these really interesting topics are not subscribed. So go ahead and do that. So Justin, today we're going to get into financial services. Probably going to ruffle a lot of feathers, but you know, the truth is the truth. And I think it's important to tell people what's going on or how things work. So to first and foremost, tell us a little bit about yourself, who you are, and kind of what you do.
Well, I got into financial services. I got into financial services about 7 years ago, just under a decade, and I fell in love with it. I fell in love with finance in general. Before that, it was definitely fitness. Obviously, you know that. And then we also we played football together too.
In high school.
Right? So that's where we get that disciplined athletic background. So this is one of the hardest workers I know personally too. Right? So consistently putting out content, consistently just out there, right? In social media. Yeah, that's a little bit about me as far as the industry in financial services. I mean, I fell in love with it. Fell in love with financial literacy. I fell in love with how money grows, right? How money makes money, right? And compound interest in general. The understanding of that and the different strategies and the ways to grow it, right? Because usually we're just taught to just save our money and not necessarily talk about different investment strategies, right? But this is another thing too. It's a taboo topic. It's a taboo topic. And whether if it's a cultural background or whether if it's maybe past traumas, right? Maybe some people have financial, like we were talking about it earlier, it's like people get sketchy when they talk about money, you know, and that's just the reality. But that's the thing. That's why we go to school. That's why we get a job. That's why we work, right? Is to get money. But then how come we can't talk about money, and how come we can't have that conversation around money, whether if it's managing it, investing it, saving it, or whatever you want to do. So that's why I got into it, and to be able to give the tools to people, because I think there's a lot of people that go their whole life. I've talked to 45, 50, 60-year-olds that say, man, I wish I did this 20 years earlier, 30 years earlier. So I guess my whole mission is really to get that information out there and to really educate and push out that information and make sure that people are equipped with that knowledge.
Yeah. And then when you say, people say, I wish I knew this, do you mean like financial strategies to build wealth, retirement, or what does that encompass specifically?
It's a multitude of things, you know. There's alternative strategies using cash value life insurance, and we'll get into that topic as well. There's so many things. It's another tool in the tool belt, right? And so I like to think of finances as a vehicle, right? There's going to be different vehicles that's going to get you different places, whether if it's, you know, crypto, right? Bitcoin, Ethereum, or whether if it's maybe a stock like Tesla, Nvidia, things like that. That's going to get you there faster. That's going to compound and grow, right? Some are going to be more safe and productive. Some are going to be more high risk, high reward type, right? It's just the type of vehicle that you want. The specifics of it is really just, honestly, the cash value life insurance side, because a lot of people tend to say that I wish I got into this 20 years earlier, because all that compounding and all that cash is completely tax-free, leverageable, and still growing, and still compounding as you're using the money. The main thing is when people are borrowing and leveraging against it, and also learning about just this concept of infinite banking as well too.
Okay, so let's get into that a little bit. So why do you think cash value life insurance has received such a bad rap? If you go on YouTube, if you go on Reddit, whatever else, people say it's a scam, don't do it. So why do you think that stigma exists?
I mean, just the word insurance, you know, like car insurance, home insurance. We think of insurance as a cost. I think that's the biggest thing. But then there's also a lot of, I guess you can quote one of my buddies, there's a lot of knuckleheads in the industry, right? The thing is they sell this as something that's the silver bullet and that's going to solve all your problems and make you, rich as hell, right? But then they completely do it for their commission and not necessarily for the client. They improperly set this up.
So they set it up in a way where they're going to make the most amount possible versus, I guess, the proper way, which I don't know if you can go into that. Like, what's the proper way a plan like that should be set up?
Yeah, so it's going to be minimize death benefit, minimize cost, maximize cash value. If all of the premium, say for example, if all of $10,000 that you put into this plan is going towards costs, that's a big payday for the agent. That's a big payday. So usually it's around $1,000 to $2,000 that's towards the cost of insurance, and the rest is towards cash value. That client can then use right away. It's minimize cost, maximize cash value, and then as from an accumulation standpoint.
Okay, and then when you say use, like, you mean, like, let's say this is me. I have $10,000. I come to you. You set up my plan. So you said $1,000 to $2,000. You said it goes to insurance. And then so what happens to the other $8,000 to $9,000?
It depends on the type of contract because there's two types. There's whole life and there's IUL. So IUL is going to be tied to a specific index. So like the S&P 500 or the Dow Jones, and then the whole life is just going to be a high yield savings account year-over-year return. So let's say you had an IUL, right? Let's say you $1,000 to $2,000 towards cost, and then the rest towards available. So let's say that $8,000 that you have, that's all loanable cash value, but that's the money that's also earning that interest as well. Whether if it's the S&P 500, whether if it's Dow Jones or whatever it is.
You take a loan against your money, it sounds like.
Yeah.
So if I take a loan against my money, and what's my loan, like what am I paying on the loan, like percentage wise?
You're loaning against it, right? I'll just give this as an example. Two examples is, let's say you have a home. You have a HELOC, home equity line of credit. So you borrow against the value. The bank will give you a line of credit based off the market value of your home. Another example is when Elon Musk borrowed against his Tesla stock to then purchase Twitter, right? So it's borrow against, right? Not necessarily withdrawing. The interest rate, it'll depend on the type of loan that you have. So there's a lot of mechanics when it comes to it, but let's just say the interest is 5%. Let's say the index goes up 10%. So you get credited 5% on your cash value. So basically, you took that money and went to go invest into something. Let's say you invest into NVIDIA, right? You made a nice return, and then now you're also earning interest over here as well. So both of your portfolios are going up.
Yeah, you're double dipping.
Yeah, double dipping. So then what you can do is sell profits on that NVIDIA stock, put it back into the policy, and then rinse and repeat. So that's where like you get the banking function of it. So that's one way to use it.
Have you always known all of these things? Or is this something that came to you from experience? Because obviously now you own your own agency, Truevir Financial, but originally you used to work for someone else.
Right.
So could you talk a little bit about your education and how you were able to really learn all these methods?
I just went on a deep dive because I wanted to know, like, let's say for an IUL, Index Universal Life, I wanted to know, how are they able to have upside without downside? What is their actual investment strategy? Like, I was just asking the questions. I was so curious. And then what even got me more involved was I started to dip into call options, call option trading.
Stock market.
Yeah, stock market, right? So I was reading charts, and I was like, it just blew my mind to where some of the call options that I made plenty of money in call options, but I also lost plenty of money too. I was trying to understand in the Index Universal Life is, how are they able to have upside without downside? They must have some sort of strategy. And so they use, you call it multiple things. It's a collar strategy, bull call spread, right? Where basically you purchase call option in the money call option and then sell out of the money call option. So that way you stay within that range. But that can get kind of complex. So I got into this. I wanted to read every book about it. I wanted to know everything about it. And then I also saw the bad stuff too. I saw the Dave Ramsey, the gurus saying all these bad things like scam this, like you're overpaying this, and like, I think what it is you can't be so divisive. You got to have an open mind. It's not black and white, right? There's always going to be some sort of gray area in every case. Because yes, there are some fucked up policies, right? There are some fucked up shit. Like just this industry in general, people lose thousands of dollars, and I've seen it
And
firsthand.
people like that are getting policies, you mean?
Yeah.
Yeah.
They lose thousands of dollars because it's improperly set up. So what I dove into is how to structure these
So, all
properly.
right, so I don't want to cut you off.
Yeah, no, it's
but then if you're signing up for a policy, how do you know that you're set up correctly?
You got to have cash value the first year. At least like 70 to 80, maybe even 90% of the cash value that you put. So if you put in 10,000, you should have 9,000 available at least, right? Because you have to understand that the cost of insurance is there because it's an insurance contract. So that's the wrapper around it. You're just using it as a utility. And again, people have a misconception about this, kind of go on and around on this because they don't understand it. And so the thing is since they don't understand it, they're not willing to learn more about it.
Well, that's why we're here today.
Yeah. I started my own agency. I started my own firm, actual financial services. So it's not just cash value life insurance. We set up 401ks. We set up IRAs. We set up all types of, we have debt consolidation strategies, right? We've helped people get out of debt, 11K in debt in 1 month, 28K 1 month, done. Help someone put a down payment towards a home, right? We do some amazing stuff for some amazing families. But I got out of that old firm that I used to work for because it just started to become more about the pockets of the advisor or the agents and less about the clients. And there's a lot of manipulation, I can say, right? And that's just the reality. Any sort of MLM type company, multi-level marketing type company, that's the reality, right? It's like Herbalife, but in the financial service.
And do you think that's really where the stigma comes? We're not going to name names here, but the people are invited to events where, they're sold this dream and you put, I don't know, $4,000 of your own money and next thing you know, it's zero. Probably has happened to a lot of people. So it's kind of like...
I think the truest thing about these companies is that the people that get into it, they have the purest intentions. They want to help people, right? It's the training. It's the upline to have.
What does that mean?
Upline meaning that your manager, right? And basically that manager is going to take whatever percentage off of you. So they have a specific contract level, and then they say simple numbers, and this is actually pretty high. Let's say someone had a 100% contract, and then you start off at 70. They take 30% of whatever you make, right? So it's just the multi-level marketing model. You invite 3 people, and then them 3 people, and then they're 3 people, But this is financial services, and so this is people's money. What I've learned, too, is that a lot of people get fear-mongered into these policies. Yeah. They just say they don't understand it.
Just sign here.
Yeah, sign here. Hey,
everything will be good.
This is the thing, and I review plans all the time. So this is one thing that was...
Anyone's plan?
Anyone's plan.
Yeah.
Right? I review policies. I review portfolios. I look at accounts. I look at statements, things like that. I look at everything. What I seen was they don't really understand what the type of policy is. It's just more so hey, what happens if something happens to you and you're the breadwinner? And it's like fear mongering. What happens if this? What happens if that? It's not necessarily a savings vehicle. It's more so a protection vehicle. And that's how they sell it. And they sell it as, you get protection, but it's also retirement. There's a misunderstanding there.
So it sounds like you've learned a lot while working in financial services, but even with cash value life insurance. So why do people think it's a scam? Do you think it's purely just off the bad experiences that we've talked about that people have, so everyone's just it's a scam? Or do you think it's something else? It's
a multitude of things. It's what they're listening to. It's the financial gurus that they listen to, right? Because it's very general information. The thing is if there's anything that's cookie cutter, you got to run away from that. So that's...
not personalized to you.
Yeah, so if it's not personalized to you, because this is not and I'm going to be real, cash value life insurance is not the silver bullet. It's going to amplify your portfolio. It can definitely supplement things. It can definitely give you security. But the reason why people think it's a scam is because the improper structure, their experiences with the MLM companies, right? Where, hey, I'm learning and this, that, and whatever. Could you come to
my workshop?
yeah,
Blah, blah,
so,
blah.
or whatever. It's the gurus that they listen to. It's the general financial advice that influences in their sphere, right? But it's also, I think what it is also fear. It's fear too. Is like, I don't want to lose my money.
Yeah, that's
You know?
very valid.
Yeah, exactly. So it's fear, like I don't want to lose my money. But again, this is one of the safest assets out there. It's just again, these are one of those things where it's like safe and productive. It's not going to be like the GameStop or the AMC type of returns, right? But it's going to be something that's going to be a safety net. So then that way you can go more confidently in risky investments.
Okay, and then how do you compare cash value life insurance plans versus like traditional retirement? I guess you could say like 401k versus like Roth.
So that's the traditional way. 401k depends if it's a Roth or tax deferred 401k. It's a traditional qualified plan. That's the thing. It's tax deferred, so you do have to pay taxes in the back end. But there's also a Roth option. If anything, the question you have to ask yourself, do you think taxes are going to be higher now or later? Right? So do you want to pay taxes now while you're working or while you're in retirement? That's something to think about, right? Now, there's nothing wrong, because if you run a business or you're making a lot of residual income or whatever it is, you need those tax deductions. So a 401k has its place in your portfolio. Roth IRAs as well, but there's limitations. So it's up to $7,000, and if you make too much money, you can't really put into it. So this is going to be for the person that is really max funding their 401k, max funding their Roth, or even if they don't want a 401k. There's a lot of misrepresentation even in that too, because there's a lot of fees, there's a lot of maintenance fees, there's a lot of taxes, there's a lot of like funds in there that are extremely expensive. So, I mean, there's a lot of things there too. And there's just limitations, right? But it forces you to save. So that's the good thing compared to the cash value life insurance, right? So in the long term, I will say that cash value life insurance, just a traditional market investment, like long term, it may or may not keep up with the market. Honestly, like I don't think it's going to outperform the market significantly, but it will keep up with the market, right? So it's, again, another amplifier. It's not something that is going to replace your whole portfolio.
But it does have like the life insurance component too, right? Where
Yeah, so
it carries a death benefit.
Yeah, so if you die, so that's the thing, is like if you only have, let's say, $200,000 in cash value, let's say you pass away and you have a $600,000 death benefit, $600,000 goes to your beneficiary and not $200,000. So if you had $200,000 in your 401k or your Roth, that $200,000 is going to go to your beneficiaries, but would get taxed as well, unless it's a Roth, right? And if they're of age. So
Okay, now what real world applications actually exist where it would be beneficial for someone to get a policy or get cash value life insurance?
So I'll give you an example. So it's usually one way is going to be debt consolidation. Basically, you leverage the policy, you borrow against it, you clear all of your credit card debt, and so now
According to the bureaus?
according to the so
Yeah.
like say you had like 10,000 in credit card debt, right? You have 10,000 in credit card debt. Let's say you front load a policy and you have 10,000 available there. You borrow against that, you completely clear that debt, right? Completely clear it. And so now guess what? Your credit score skyrockets. And then whatever you were paying towards the credit card companies, you now got to pay yourself, right? So this is the thing, is like you have to be an honest banker. So if you're going to pay the banks all this interest, you got to pay yourself all that interest too. So now, is this a forced repayment plan? No, you have flexibility. And so is this a loan that you have to pay back? No, because it's collateralized by the death benefit. Like being able to manage your finances good. It's like if you're going to pay back your student loan, your mortgage, your like all that interest to the banks, you might as well pay yourself. That's the mindset. Even just a basic mindset is just paying yourself first, right? In anything, pay yourself first and then pay yourself with interest. That's really where it comes to the infinite banking aspect of it. It's where you recapture all the interest that you were paying. Even at this, you have an APR of credit cards. Let's say it's total of 29%. 29%. let's say you borrow from the policy. Let's say you don't get any interest credits, and it's 5%. 5% is way better on simple interest compared to 29%, right? So that's one way easily. So then that way you can put it back into your ecosystem. Easily the first way that you can apply for it. Another way is, and I'll say a personal example, 2 personal examples, is I saw NVIDIA, right? I saw an opportunity for NVIDIA. NVIDIA dropped significantly back in 2022. So I took a good sized loan from my policy and dipped into that. And then at 2023 came around and I saw it at a price point that I liked, right? And I took an even larger loan. And so to say percentages on that, since I invested in that, I'm up roughly about 600% on that. And so now I'm keeping all the profits and I repaid myself, right? All the money that I took from my policy.
And you say when you say paying yourself, that's the interest or whatever goes back into your plan, you mean?
Yeah, paying it back. So you can either pay it back to your bank, build up your emergency fund, since it's something that's non-collateralized, or it's collateralized, but it's not forced to repay. You can pay it back to your bank, build up your emergency fund, or you can pay that back into your policy, right?
You have the choice.
You have a choice.
Okay.
So like you want to have some sort of bank account where it's like, hey, there's the transactions are happening here. So the loan goes into this bank account, and then this bank account, it takes from that bank account to go into the investment, and then the profits from the investments go back to the bank account. You can build that up and then pay the loan back off, or you can just build that up and build up your emergency fund. Right?
Okay, and then this is like very complicated. We're getting in the weeds a little bit.
Yeah, a little bit, yeah.
So I think we even might be losing people that are watching. So like, as someone who is learning about financial instruments or looking at maybe cash value life insurance, I know you mentioned earlier, until who you're working with is good, like if you have a good policy. Is there any other advice you have for people who are getting into policies, or how they can make sure that they're setting themselves up for success and not a commission for someone?
Yeah, so I say do your due diligence first. Do your due diligence first, and then get educated, right? Get educated, go to seminars. I mean, we have, and then even on our website, that we have blogs and everything as well too. I think the biggest thing is just do your due diligence, ask the questions, right? Okay, and really try to understand the numbers, and then how much cash value do I have the first year? If you see zeros the first few years, you better run as fast as you can. As fast as you can. They'll say, oh, this is a great plan, this is a great long-term strategy, you have tax-free retirement, but you can't access it for another 3 years. And that's a way for them to get their upfront commission, to get the residuals, and for them to not come back. It's like sell and then answer later, right? Like the whole goal is to really sell them policy and then have them buy, right? And then guess what? Like people have buyer's remorse all the time.
Yeah.
They buy and then you answer all the questions later. So that way they get the commission. But then again, it's really coming down to making sure the client is educated. And even if they're not doing their due diligence, is say, hey, this is what I want you to do. Watch these videos, watch this seminar, read this book, do this, and then from there, if you understand it a little bit better, then we could circle back and see if we can develop a strategy for you.
Yeah, it sounds like, I mean, obviously you have to really do your homework here and know what you're doing versus just trusting that whatever person you're signing up for, whatever, is going to be best for you. So have you heard of any horror stories of like people signing up for these plans and realizing that they lost X amount of money or whatever happened?
Man, I'm glad you asked that. I'll tell you the story was one of the first ones that I've seen, and he was contributing a good amount. I would say roughly 1,000, right? And then he dropped it down to 500.
A month or
1,000 a month.
Okay.
1,000 a month, right? And he has no wife, no kids, so he just wants it purely for retirement. So this whole plan, this whole time, he wanted something different than a 401k, something different than an IRA. This whole time he thinks his money is growing. Actually, 3 years later, he puts about a total of a little over, close to 20,000 into it. The available cash value that he had after that time, guess how much?
You tell the audience. I don't want to guess because I probably know.
He put in 20,000, only had 500.
Holy shit.
Yeah.
So what happened to literally all $15,500 that he had been putting into the plan?
So it went to costs. It went
Like
to
cost of having the plan?
cost of insurance,
Yeah.
the expenses, everything that's
All
built,
these fees or whatever.
fees, right? Because like the premium that he was putting in was all towards insurance, all towards costs. Because then his death benefit was like $1 million, $2 million at 33, 34 years old. I mean, that's a significant amount, especially if you don't have a family or anyone to leave behind anything, right? He wanted it strictly for an alternative, a savings alternative, strictly for that. And what he got was the complete opposite, an expensive insurance policy. And that's why Dave Ramsey says, hell no. That's why all these gurus say, hell no, because they improperly design it.
So then how did you find out about this? Like, were you the one specifically looking into this plan? Or like, how did he, like, I guess eventually realize that this was going on?
So he came to me as a review, right? He knew he had it for a while. He's been throwing money at it for a while. And he came to me as a referral to review it. And we reviewed the plan. We looked at the numbers. And it was, I'll just say this, he wasn't very happy.
Yeah, that's a very hard delivery.
Yeah, so it's like, how could he get the money back? You'll see commonly lawsuits against these companies but it's really not the companies. It's really the person who set it up.
Yeah.
Right? You got to know who you're talking to, right? And if that person can't even explain the investment strategy behind an IUL, like the call option strategy, then you got to run. Like, if you don't understand the actual mechanics, the fundamentals, and the general account portfolio, and how dividends are given, how interest is credited, all of that, like, you got to know. Because then how are you going to explain that? He's like, oh, this is a policy, it just grows. And he's like, sometimes, yes, it's easy to simplify it. But there's also those people who do their due diligence and they want to get into something that's going to help them, right? Like, I spoke with recently a lawyer, right? And he has a successful law firm, very successful law firm, makes too much for a Roth IRA and was looking for an alternative. And so now he already had an IUL. He didn't even know that. He didn't even know. He didn't even know, right? He already had one. And like, he was just like, yeah, my friend just sent me up on this and I just know I needed it for myself and for my kid and, and he didn't even know. And then once I actually explained the details of it and how you can actually use this as a tax deduction in your business, like there's a strategy within that, but that's a whole nother
can of worms.
Yeah, a whole nother can of worms.
So you yourself, if I had come to you and you had looked at my plan that I had lost $15,000 over 3 years, can you fix that plan? What do you do at that point?
There's a multitude of things. The first thing is like you can just take the loss as it is, right? Like take the L. But not many people are going to want to settle with that. The next thing is you got to be patient and you got to lower that death benefit. And you got to talk to the carrier, talk to the company and say, hey, could I lower my death benefit? And then you got to do that consistently while also contributing. So then that way you lower the cost. That way you get your money back. But it's just now you're locked in for life at that point. So where it's like 10, 15, 20 years, like you have to wait until it breaks even at year 15. Break even meaning that the money you put in is equivalent to the money that's in there. So
now what happens if you don't pay it?
If you don't pay it, it's going to lapse. And now the policy lapse, it's gone, and all your money is gone. And so that's how people lose money too.
And then with all this going on, when you created your own company, like what really drew you to create your own company, and like what's your philosophy on how you guys do business?
Our first thing is education. We want to make sure that, and we even have in-person seminars here at the office, but it's not just on our strategies. We bring in other professionals, tax professionals, realtors, real estate investors, wealth coaches. So then that way we equip people with all aspects of finance, right? And one of my dreams is even getting into this industry was to be that one-stop shop to where it's like, hey, you need this, you need that, you need to set up a trust, you want to invest in the real estate, just become a one-stop shop. and it's slowly coming to fruition. Of course, there's going to be, the grind in business, but we're starting to have the right partners, the right people, and it's really about service. It's really about service. It's about education and making sure the client knows what they're getting into. Like, hey, this is how it works. This is an alternative. This is what's available in the first year. Again, it's all about making sure they understand. This is how much is going towards insurance. This is how much in cash value. This is what you can take out. Year 5, you can take out this. Year 10, you can take out this, right? And then this is a projection of 6%, but sometimes they do 10%. Like, I have clients that done 16, 17% in these accounts. And that's pretty high for an IUL.
And would you say that's what really separates you and has helped you scale? Because you've been in business now, what, like a year, maybe a little over?
Yeah, over a year, yeah.
So what do you think has been the biggest thing that has helped you grow so fast, or even come to a point now where you're building so many relationships with outside partners for whatever services?
I think what it was is when I talk to them about my values. I talk to them about what I want to do for people, or have clients for the long term. Right, have long-term clients and really help them in their whole financial life, and not just sell someone on a product and then forget about them ever. Right?
Like, they're a number.
Yeah, they're a number. Exactly, they're a number. Like, going back to the horror stories, there are people who just get sold on a policy and don't ever talk to the person who set it up in the next 5, 6, 10 years.
Yeah.
And they just disappear, or they're even out of the industry in general. It's really coming down to making sure that people are educated and having the right partners and talking to the right people and saying, hey, like, this is what I want to do. This is how I want to serve. And this is what I can do. And this is how I help you. And this is how you can help my clients. Right? It's really just a value exchange. Because, hey, once you become a client, you're not only getting just a great plan, but you're also getting a wealth coach. You're also getting real estate investors. You're also getting tax consultants. You're also getting all these other resources that can help you. Right? So again, it's just really holistically helping that person. And that's really what it is value exchange. Hey, like, you're a client, guess what? You get all this and some.
That's a big value proposition.
Yeah.
So why do you, as a business owner and owner of the agency, feel the need to do that?
Honestly, man, just because of my past experiences.
With who or what?
With just former companies. Or I can say company, right? Just my past experiences, and oh, man, this is going to get deep. But, even in this industry, like, especially with that MLM model, just being real, you lose friends. You lose friends, and when you're a young 21, 22-year-old, you want to help people. And it's like, why aren't they listening? And I guess it's just their approach, and it comes off scammy. My own experience is the reason why I got into this, and I don't want people to ever experience anything like that working in this field, but also being a consumer in this field. And then another thing is, I want people to have the knowledge and to be equipped with the knowledge, so then that way they can go confidently.
Yeah,
and
so you
make
want
those
to
changes.
empower them.
Empower them.
Yeah, to make the decisions on their own, right?
Yeah.
Versus, I guess, asking you if something's a good idea.
Because, like, your typical financial advisor, you just give them the money, they do it, right? But they don't really educate you on what they're investing into and why. If you break it down to them, this is this, you can borrow against it, right? It's not withdrawing. It's borrowing against the value.
And then to play the devil's advocate a little bit, like, is there anyone that this plan isn't for them? It wouldn't be a good decision?
Yeah, to be honest, it's not for everyone. It's really not for everyone. If the person is really just have bad financial habits in general, I think the biggest thing is really reevaluating your habits, reevaluating what you spend your money on, managing your budget. I think the biggest thing is go back to the fundamentals and just establish a budget. There's envelope strategies, right, with Dave Ramsey. There's living off beans and rice, right? There's people who just need help with the budget, need help with the overspending, need help with the psychological aspect. And that's where wealth coaches come in, right? Mm-hmm. Shout out Joe or Don.
Yeah, I was about to ask. So that's part of what you do.
Yeah.
As like your holistic like agency, right? That you provide that assistance or that help with those things.
Yeah, with a coach as well too, right? So if they're not ready to start anything, and maybe at the time what their budget allows is maybe just a protection. protection policy. They have a lot of assets, or they have a home, they have a family, they have kids, and if they're gone, you never know, right? So that's that component to it. Don't do it to force people or fearmonger people into it.
Obviously, providing value or showing where you guys could provide a solution of something that's going on.
Yeah.
And then if they want to, they want to. They don't, they don't.
Like I said, it's not going to be for everyone, and it's not the silver bullet. What I am going to say, it's an amplifier, right? It'll amplify whatever you have, right? So let's say you have enough cash value, you have enough, a big safety net. So then that way, like I said earlier, you can go and take those risks. You can go and dip into crypto. You can go and get into a business venture. You can go and so then that way you have the safety net, because God forbid something happens, and if that goes under, then guess what? You got this to save you.
So what if someone wanted to get started with you, or like really learn more about any of the stuff that you're talking about today? If I wanted to, for example, what would the process be like?
Yeah, so you would basically book a call. I mean, go to our website, book a call with one of our strategists, and then from there, they will help you. You know, like I have a great team, great supporting cast, so you can go there and strategize with them. From there, we'll take you through the whole educational process and basically hold your hand through that whole process, right? Because sometimes you need that. Sometimes you need that support, right? Because what you see is only what you see, right? Sometimes you need that bird's eye view. And that's where we come in, is where we're here to support the goals, whether if it's a good time or not to start.
Okay, and then like what about if I had like a really messed up plan where unknowingly had been losing thousands of dollars each year? You guys take care of those too, right?
Yeah, we take care of those. So there's multiple things that you can do. So you can continue to reduce the death benefit and pay into it and restructure it, or you can transfer whatever you have in there into a newly properly designed one.
Oh, so you can actually do a transfer.
Yeah, you can do a transfer, and it's called a 1035. So it's from like to like, right? It's non-taxable, like a real estate to real estate in 1031 exchange.
And then your old one would like die in a sense, or it's done?
Yeah, okay. They close it out, so it's closed.
As we're kind of wrapping up, I know I asked you how you've been able to grow so quick, but then what's your idea of the future to actually take your business and agency to a whole nother level?
What is basically streamlining? I mean, we were talking about this too, and your, I mean, genius ideas of having setters as well, and it's just really just streamlining everything and making sure that, hey, there's appointment setters, right, or account managers, you can even call it that, where you can book a call and you get the video and you get your spreadsheet that you fill out for a budget sheet, and then by the
streamline.
Yeah, streamlining it.
Yeah.
So basically, streamlining the process.
Automating it in a sense.
Yeah, streamlining the process and having people on board and making sure that they're setting up appointments, making sure that they're educating the client, talking to the client, and then setting up with the right strategist, the right financial strategist. And from there, they'll decide whether or not it's good for them.
Okay, yeah, because you had said one of your pain points in this business was, you know, there's some people that are good at one thing but not other things. So I guess it's trying to have you work on the business, not in the business.
Yes. Oh man, like that's one of the things is like there's two things. Is working in the business, which I love consulting with people, but working on the business too. Like everything outside of it, how like the functionality of the business, right? The marketing, the systems, the SOPs, right? All of those different things. It's like there's so many different things, and to be completely vulnerable, I'm still learning and I'm still growing, and I make the mistakes, and that's just the reality of business. Is people?
Yeah, there's no magic blueprint of how to do everything.
Yeah, and you just gotta go out there, trial and error, and just what I've been currently doing, trial and error, and then now like streamlining it to where like we have more people on the team doing different roles and delegating. Right, that's gonna help me big time as far as like cutting the processes and speeding up the process.
Freeing up your time.
And freeing up my time too. So I way can get more sleep.
All right, so closing remarks, anything else that you want to say to people out there who may be watching, maybe have an open mind to cash value life insurance or any other these financial products?
Well, all I want to say is just, have an open mind. Have an open mind to be educated. Come in with a level of discipline, and to be able to, it's not about what gives you the highest return. It's more so what helps you want to live more intentionally in your life, right? So that's what it is, and that's why we work so hard for money, is because of the freedom. My thing is being able to be open and being able to listen and to be able to have that mindset around building the right habits, right? Even if it's the baseline is building the right habits, that's where it is, right? Because like I said, it's a stigma around money. And so my biggest thing is to be able to give you the tools. Now it's what you do with those tools is what is most impactful. So, and again, taking action.
Very important. And without taking action, nothing else matters.
Exactly. And because like that's the thing is like people can get all the knowledge in the world, but if they don't take action, what's the use of the knowledge, right?
Very true. All right, Justin, I want to thank you for taking the time, hopping on here. All the information will be below where you can reach out to Justin, schedule a free consultation, look at all his stuff. Thank you guys very much for joining us today. Please subscribe again. It really helps support the channel, keep things going, get lots of good guests to learn about a lot of different topics and subjects just in the world. All right, we'll see you guys next time. Take it easy.